Welcome to the Aquest Podcast, conversations about regs, funds, and governance with your host, Daniel Lawler.
It's January 2019, but a little bit late in January to wish you a Happy New Year, but still time to reflect on what happened in 2018 and look forward a little bit to 2019, see what our expectations, hopes, and perhaps even dreams are for the new year. I'm joined by two dreamers from Irish Funds for my co-hosts for this episode, Kieran Fox and Declan Casey. Gents, thank you very much for joining me.
Welcome.
Thank you, Dan.
Glad to be here.
Dreamers, is that overstating it? Too long in the industry to...
Too much grey hair, I think.
Oh, yeah.
Gosh. Would you like to introduce yourselves?
Sure, yeah. Kieran Fox, Business Development Director at Irish Funds. I've been here at Irish Funds for over 11 years. Prior to that, spent a little bit of time in the central bank before you were there, I think, Danny. And before that, spent some time in asset management in London.
And 11 years, I know I was in the central bank 7 years and the institution changed a lot in that time. How's Irish Funds changed over 11 years?
We've changed quite a bit, actually. One of the things... So obviously the industry's got much bigger in terms of assets, number of funds and type of funds and fund products that there are. ETF's been a big development, obviously, in the last number of years, strong growth. In terms of the association, we've changed a reasonable amount as well. So one way would be that we currently have 140 member companies. That's about a 35-40% increase in member companies from where we would have been 4 or 5 years ago. Most of those new member companies are asset managers, and that reflects a deliberate change in our approach in trying to attract asset managers as members of the association, but also more recently a change in the profile of companies that are coming and setting up here in Ireland. So 140 member companies. Biggest cohort are asset managers, so something like 61 asset manager members. And the next biggest cohort then being fund administrators. And as I say, if you're going back 3 years ago, 4 years ago, that would have been inverted. So administrators would have been the biggest member company type, and asset managers would have been much less.
And many of those asset managers mostly located abroad, are they?
It's changing. And we might come on to that, but it is changing. Historically, yes. We would have had maybe 10 or 15 with the presence here in Ireland, and the rest would have had a presence overseas. But now more and more of those managers are setting up here, be it either a management company, an AIFM, or some of the MiFID entities, and putting people on the ground.
And the number of staff in Irish Funds is probably quite a bit bigger now than it was 10 or 11 years ago.
Not that much bigger.
No?
A little bit bigger. No, a little bit. We're probably at 12 or something like that. So we've increased maybe 4 or 5 over recent years. We do leverage quite a lot of our membership structure. So we currently have 8 steering groups and 42 different working groups. Although that will change a little bit in the not too distant future. But within that structure, we've got more than 700 people involved working on different things. So that structure and the amount of people and resource that's available within that structure is one way that we leverage with a small headcount here in the association.
And it is a very active industry, an active association. Do you find it reasonably straightforward to get people to put their hands up to contribute to groups and working parties and stuff?
On the whole, yes. Although it can vary, and because we've got such a wide number of working groups and steering groups, there are issues and topics and individuals who will be much more active, much greater priority, strategically important issues. So they will obviously get the time and attention. People will always want to contribute on those kind of red hot topics. Or the areas that are really important for them and their company, and so there'll be other areas that are a bit quieter. So it kind of waxes and wanes a little bit, but on the whole, it's a very active industry, and our member companies, luckily, are very keen to participate.
One of the things that struck me when I was on the other side as a regulator and dealing with
On the dark side, Danny.
on the right side, dealing with the industry from the other side, was that your stakeholder management skills must be exceptional, because you have a lot of groups and a lot of individuals and firms that are broadly aligned, but individual firms do things slightly differently operation-wise and attitudes. How do you herd the cats?
It's a challenge. It's a constant challenge. You do learn where some of the sensitivities are and where some of the conflicts are. So you know in advance how to expect, where to expect some challenges, and you try to navigate through that. You probably learn how not to offend people and how to try and build consensus opinions. Some issues are tricky. But you listen, my personal view on this is, at some point, all of the relevant stakeholders on a particular issue or in a particular area are all going to have a view and a valid input at some point. So my view is they're better off being involved in that earlier in the process, and we can arrive at an outcome that's maybe not ideal for everyone, but certainly an outcome that works for most people quicker.
Very diplomatically put.
I mean,
Declan. That's the truth.
You don't want me to be as diplomatic. I know. And it's an increasing challenge, Danny, with the breadth of our membership growing. I think the one thing that kind of assists us is, I think everybody can agree that it's better we disagree within Irish funds and within our groups than maybe in front of the regulator or policymakers. So I think in the end of the day, people have their views, and it's how we can kind of reach compromise within our structures that allows us then represent an industry-wide view. But it's not without its challenges.
Absolutely.
One thing that we hear quite a lot, actually, comparing Irish funds or the Irish industry to other jurisdictions, is that the industry here actually works quite collaboratively well together on industry issues. We're pretty firm, actually, on our working groups, and when we're working on an issue, you leave your company hat at the door before you come in, and then we all try and make the industry neighbourhood problem better. And then when people walk back outside the door, they put their company hat on, and they compete, sometimes ferociously, for the same piece of business. But we try and make it better collectively before they do that.
That's a theme that's sort of been there right from the get-go when the industry started here, wearing the green jersey and stuff like that. That's still alive and kicking?
I think so. And again, I mean, you talk about the evolution of the industry, and Kieran can talk back 11 years. I can look back 17. And I think
you don't look at Declan.
Thank you, Danny. It's a good job. It's a good job. It's a podcast. But again, I mean, in the early days, we were producing guidance papers. A lot of the work went into guidance papers and kind of self-help and collective views and all of that. We still do, but I think the industry has matured, our membership has matured, and increasingly what's been asked of us is increasing advocacy. And we can see that initially with the regulator, the government agencies, departments, increasingly more in Europe. And again, that kind of mirrors an evolution, and I think certainly international policymakers' desire to kind of centralise policy making more. Even you know, you could look at the evolution of CSER to ESMA, and the increased powers, the way the national common authorities are buying into these pan-European groups. And again, I suppose it's an evolution of the single market in some respects. So again, we've been on that journey, and to Kieran's point, I think with our membership and that it's important to represent a cohesive and collective Irish position, our industry position as well.
And do you see your international engagements increasing now over this next period? Do you foresee a lot of time spent in Brussels, losing one of our big allies and a nation where we are generally aligned? Our views of the world are quite similar in the UK, and assuming Brexit proceeds, there's other bridges that need to be built.
Absolutely. It's something we have kind of been aware of for a year or two now, accelerated with Brexit. Obviously, I think even some of our politicians, particularly MEPs maybe, and some of the government agencies that that contribute actively in council working groups and things like that would always have felt, look, that it was always easy to, their views were very much aligned with the UK view and perspective. And again, I think that is a more of a global perspective than a domestic national perspective. And again, looking at making a bigger pie and with that a bigger slice for everybody. I think with the UK going, absolutely, we need to do more. And as an association, we're looking to recruit a full-time resource for Brussels, and again to feed in to the debates and provide our insight. And that's one thing I think, in fairness, both domestically and increasingly internationally, we've been able to deliver good quality input to debates. We've got a wealth of experience, and in fairness as well, that experience rests in the regulator as well. When you look around Europe, and a lot of the debates with respect to pan-European distribution of product and things like that, that in fairness, over the last year, the Commission has approached us a couple of times, in particular with respect to barriers cross-border distribution. Yeah. That we're very well placed. We've got lots of experience to show kind of some of the elements that might frustrate pure cross-border distribution of investment funds.
And do you find that regulators in other member states are sort of open their door to a national industry association from another member state? Are they interested, or are they just interested in dealing with the pan-European groups?
I think they tend to engage through ESMA and the other established groups. I mean, we're open to engaging with them, but we tend to kind of, that can happen through our membership of a FAMA, for example, our counterparts and things like that. That even aside from the formal AFAMA structure, there's bilateral exchanges between ourselves and our counterparts in other jurisdictions looking for information, or how do you do it in Ireland? And if their regulator, for example, has a consultation paper out, they might seek our views and things like that. So that takes place. Increasingly, we're developing more frequent engagement with ESMA. I think that's good. And again, it's important that we bring something to the table. I'm always very keen that kind of some thought leadership and things like that when we meet stakeholders, because it gives them a reason to continue to engage and meet us. It's not just a case of, you're looking for an update. I think you have to bring something to the table, and it's a mix. It's a mixture of items. But again, I think generally policymakers, if you can give them a kind of a well thought out view, they're interested in hearing it.
I think that probably reflects that you guys had a very busy 2018. We're at the end of January. Can you even remember 2018, the highs and lows of 2018? What were they?
I mean, it's a good question, Danny. The industry never stops, and we certainly don't rest on our laurels. And I always think it's interesting when you talk about kind of the wins and things like that. And sometimes it's what you stopped happening as opposed to what you achieved, or even looking at regulatory files or decisions. Kind of, it could have been a lot worse. We might not have got what we wanted, but it could, where we started from, it's better than that. But I mean, some of the kind of key ones that spring to mind is, I think, CP86 and the rollout and implementation of CP86. Obviously, that was a big body of work that spanned, I think, probably 3-4 years of the central bank and industry. And again, I think I'd love to see that being championed as a workable European model. But I think the debate, particularly on sort of Brexit, has shifted somewhat. That I think certainly Ireland and the UK in particular had a perspective that what was important is to where activity is done, and that was kind of, who did the activity. So there was an appropriate person in an appropriate jurisdiction. Whereas I think after Brexit now, the perspective has shifted slightly, and it's as important where it's done. Again, it's unfortunate, but I can understand policymakers' maybe perspective in that regard. There was a lot of work done, and a big file that was published in 2017 a lot of work done and a lot of engagement in 2018 was the ESA reform. I think it's improving, still something that we will actively engage on and keep on top of as we go into 2019.
How do you see that playing out? Do you think you're going to see more power drawn back to the centre?
Good question. That's the goal. And again, I think it speaks to the single market. I think it was a very aggressive proposal, and I think it might have undermined the ability, or might have scared policymakers to some extent, particularly national competent authorities. It might have been seeking to do too much in too short a time frame. But again, accelerated by Brexit. At an ECOFIN meeting earlier in the week, I think the Romanian presidency said that they want to focus on the AML elements of the text and try and get them over the line as a priority. If that is the case, I think the ESA reform, the other elements of it may well fall into the next Parliament and Commission. But obviously there's parliamentary elections in May and a new commission in the existing commission sit until the end of October. So we'll wait and see.
I think I don't know enough about EBA and IOPA, but certainly on the ESMA side, it looks to me like the aim of supervisory convergence and convergence across member states that was feeding a bit into the ESA review, and there was certainly a sense that was they needed to do more, wanted to do more. I think through things like the supervisory coordination network that sprung up as a result of the Brexit opinions and what have you, that's kind of achieving that anyway. So without the ESA review, they're sort of getting to the end that they wanted to get to.
I agree. I think that's right. Again, I think the ESA proposal probably just was a little seeking to achieve a little more than regulators and others were comfortable with. That again, I think when you look at the evolution of CESAR and ESMA and all, I think there's been a lot of good work done, and it's for that to continue. I think my certainly thinking is that national competent authorities expected kind of the ESA proposals to include peer reviews and things like that, as opposed to a shift in decision making to ESMA. So again, I think they were taken aback by the content of the proposals when they were published, and they could have maybe signed up easier if it was kind of along the lines of peer reviews, supervisory cooperation networks and things like that.
Yeah. So allied to that, 2018 you had GDPR, you had MiFID II. MMFR, Danny. We thought, we thought it was a win until we were given a little sting in the tail and spent kind of another year almost trying to understand how that happened. Look, it'll be put to bed in 2019 and we'll move on. As you said, MiFID II, again, interesting, and going back to some of the other comments about the shift or the change in membership. Again, a lot of our manager members would have been UK or other kind of would have bases in the UK and others. So on MiFID, they were more interested in the FCA, HM Treasury's approach and application of it rather than the central banks. But now, given the increase in companies setting up here, the central bank's view, the Department of Finance perspective in transposing and implementing MiFID and further iterations becomes more relevant. So certainly I see that is one aspect of our advocacy that's going to change considerably going forward. You're being more sanguine about the MMFR than I am. I'm quite annoyed. I think it's the wrong outcome. But anyway, we leave it. It's done. 2019, we're already nearly a month in. Kieran, what's the expectations?
Yeah, I mean, listen, I don't think anyone is under any illusion that 2019 is going to be a particularly easy year. I think some of the big regulatory ticket items that you guys covered, maybe not as many of those coming down the track in 2019, but I think people are steeling themselves for a reasonably difficult year nonetheless. If you look back at 2018 from an Irish industry perspective, from an Irish funds perspective, there were positives. So we talked at the start about the membership growing, assets in Irish domiciled funds are going up, more Irish funds being authorised and domiciled, more people setting up a presence here. and that's all quite positive. But at the same time, the backdrop, you have a challenging narrative in financial markets. 2018 was a much more difficult year than some of the previous years before that. In the asset management industry, there are still, I think, a lot of scrutiny around fees and margin compression. I think that's something that's probably going to continue. I see that more as a secular than a cyclical trend. But notwithstanding that, 2018 Ireland was still the fastest growing in terms of assets of the 5 largest fund domiciles in Europe. Has been the fastest growing for the last 5 or 6 years, and last year was no different. So that's positive. But 2019 will be a challenge, and not least of all because of some of the uncertainty around Brexit.
Gosh, we made it nearly
I know
20-something minutes
we
in.
did well, actually. I was deliberately trying to bite my tongue on that. But we've kind of broken the watershed now, so we may as well
go on.
No, but I mean, look, it will be challenging, particularly around the uncertainty as much as anything else. We had in 2018 we had the development of the temporary permission regime. Early in January, the FCA switched on the notification process for that. And that helps. That takes some of the pressure off. We know that there are almost 3,000 Irish domiciled investment funds that are registered for sale to UK investors. I expect the vast majority of those funds will notify under the temporary permission regime, which will enable them to keep distributing investment funds to UK investors for up to 3 years. Late in December, we had clarification from Treasury in the UK that new UCITS sub-funds launched after Brexit date would be able to come in under the temporary permission regime as well, provided they were part of an umbrella structure that had already been registered under temporary permission regime. So that's all quite positive. We had a recent statement by Ed Sibley in a speech he gave on the 16th of January about the MOU that's currently being negotiated between ESMA and the FCA, which the central bank would have to sign bilaterally. And he, for the first time, really went further than the central bank have gone before in saying that the MOU will be in place in time for Brexit, and that firms can carry out their planning on the basis that the MOU will be in place. And firms can also carry out their planning on the basis that portfolio management will still be able to be delegated to UK authorised managers after Brexit. So they're helpful statements, but there's still obviously a lot of uncertainty around the political process. Will there be a transition period? Will there not be a transition period? Will the withdrawal deal get approved? A withdrawal deal? Any withdrawal deal? Will Article 50 be postponed? Will it be delayed? So they're all big uncertainties at the minute that many companies are still trying to deal with on a day-to-day basis.
Yeah, I think, if you look at the funds industry and you look at the impact of Brexit from a sort of, if you step back and look at it a bit coldly, from a regulator's perspective, at least you're talking about rules that are already aligned, the same levels of investor protection and the same prudential approaches to supervision. So that's not going to change overnight, albeit in time, presumably it will. So it does give you a buffer where you can put in place arrangements that are sensible, that continue to protect investors. You don't necessarily need to panic day one because you know those protections are there. But this is a political process.
It's wrapped up in a big political debate about future trade agreements, which makes it a lot more complicated. But you're right. I mean, on the face of it, it should be pretty straightforward. If you and I were sitting down to work out the Brexit process and how it applied to investment funds, I'm sure we'd have a pretty sensible outcome. But
so we're sensible people, Kieran.
We're sensible people, politicians maybe not so much.
Give us some good news for 2019. Let's see. Surely the good hope that the Investment Limited Partnership Act will progress through the parliamentary process?
Yeah.
Yeah.
When does the podcast go out?
Yeah. There's been a huge amount of engagement, very active engagement, I'd say, particularly in the last 6 weeks. Big push to get a bill that's ready to be published. So again, where we are today, we hope in the next week or two that we'll have a bill to be published. But again, I think may refer to Brexit, and if the government has to drop the legislative timeline or table to deal with all Brexit legislation and things like that, well, I'm not sure we could successfully argue that the ILP is a Brexit piece of legislation. But again, I think certainly we're keen to get all our ducks lined up and get it published as soon as possible.
And in tandem and kind of linked to that, you have the real asset depository regime the regulator is proposing, which hopefully won't take too long to
it's something we've been talking about for a while. And again, it kind of sits in tandem with the ILP and things like that. For the last, I suppose, 2 years maybe, we've tried to push PE and real assets and that. So that speaks to having a legislative vehicle, i.e. the ILP, that's fit for purpose, having a regulatory environment that's fit for purpose. So again, we're also just in the last few days a significant submission went into the bank on revisions to the AIF rulebook, again to facilitate and pave the way for ILP and PE investment. So again, we want to have kind of where we're coordinating everything. We'll have the legislation, we'll have a regulatory environment that's fit for purpose. So yeah, it's active, but like everything, Danny, nothing's done until it's done.
Other highlights likely to come up in 2019?
Highlights are wow. Issues, challenges.
Ireland wins the Rugby World Cup. We're allowed to say that.
Yeah. Well, we did say dreams.
Yeah.
Probably a bit more on CP86 this year, I'd imagine, in terms of inspections and the themed inspection.
Yeah. Now that again, the transition period ended in July last year. The Central Bank have signalled that they intend carrying out themed inspections on the application of the CP86 requirements during 2019. So certainly that's something that we'll be watching for and engaged in.
I think when we get to the end of 2019, the kind of conversations, I'm having a lot of them now around the organisation effectiveness role and what does it mean, and do I do this, do I do that, what's the standard? I think by the end of this year, we'll probably have a fairly good idea as to what the industry approach is, what the benchmark is, what the regulator is comfortable with. And I think
so.
Clearer position now.
Yeah, no, absolutely. Now, but I would note, I think there's a European perspective to this as well. And again, it's like the ESA reforms had detailed requirements with respect to the powers ESMA that was provided to give ESMA in our instance, or in our industry, for example, powers look into delegation and outsourcing arrangements. So I think we can't ignore ESMA, peer regulators, and all of this. So again, I think, but that said, I mean, all the work that the bank did in CPA6, it's all very transparent. It's all out there. There's very detailed kind of thought process, and all of that. I think has put us in a good position, to be quite frank. And it didn't always seem like it at the time. But I do think if you look at CP86 and collectively where we've come from and where we are now, I think certainly it's put us in a good place to have those discussions. Again, touching on some Kieran raised performance fees, it's just topical. You're hearing it in Europe, other regulators, and it builds upon some of the commentary that started last year. You have ESMA just before Christmas published their a study on their supervisory work on performance fees and all that. So I think that's we're going to see that continue. Sustainable finance, environmental sustainability, governance, big thing, quite broad. In fairness, AIFMD as well. I think now that the Commission, the Commission have now got the KPMG report, so they'll have to do something with it. I think the early summary of the report is that there's differing applications of AIFMD throughout member states. So again, I think they, having done the work, they now have to see where they go to next.
I wonder, will they return to the third country extension of the passport, turning on the member state reference approach?
Well, now again, and we'll go back. You can't consider that absent Brexit environment and all of that particularly relevant. So yeah, we'll wait and see. I suppose again, if we look back, and we'll have a new one. Although we'll have a new commission later in the year. When the new commission, when the last commission was established, Commissioner Hill came out with a CMU package. So again, maybe something like that. I think there's still, we were very supportive of CMU and very engaged, as I think generally industry was. We have to see if there's I think there's still elements of it that the Commission believe that still would benefit from delivering. Looking at how the asset management industry can help finance the real economy is still something that's out there.
I think when the Commission has their resources, when they're able to marshal them a bit better, and Brexit is maybe either off the table or a little bit more certain, I think they'll definitely go back to CMU. I think alternative sources of finance is absolutely what they want to focus on.
I think there's strong political support in Europe, in the European Union, for the Capital Markets Union project. I go back to the point just covered on AFMD and third country passports. I don't think there's anywhere near the level of support in Europe for turning on AFMD passports or AFM passports. Yeah. I can't see that happening anytime soon.
Yeah. I think the one element of something like that to watch for is it going to be a pro-Europe type of approach, or will it be a global approach? In that, certainly, I know some of the early commentary on off of Brexit. Well, it's even more important now that we have kind of a strong collective European asset management industry. I wouldn't say that excludes the global asset management industry, but again, I think historically, and a lot of our alignment with the UK was, as I said, a bigger slice of the pie. A bigger pie is a bigger slice for everybody. So again, it's just something to watch for, whether the initiatives are more insular looking in Europe, or whether they do support kind of a global product. And again, a point we make often is the UCITS product is a global brand, a global success. So it would be wrong to try and only view that from a European perspective.
Anything we've missed, Kieran, for 2019?
No, I mean, listen, I agree with everything that's been said. I mean, I do think that it would be, to Declan's point, like, we hope we're not at peak globalization, but there's a big political influence to this, and it'll manifest itself in things like third country passports. I mean, it is counterintuitive that if Europe recognises the importance for capital markets union and things like freer capital flows and non-bank financing, then it's counterintuitive to try and restrict access or make it more of an internal market with kind of less interactions globally. So there is a bit of a paradox there, which hopefully won't materialise. In terms of other things for 2019, I mean, one thing that I would maybe just touch upon is that I think the environment and the infrastructure in Ireland is changing. We talked about it in terms of asset managers coming, in terms of membership of the association. We've seen some of the reports coming from the central bank about the number of applications in process with them. I think if you fast forward the clock, maybe beyond 2019, but into 2020 or 2021, I think the landscape and the fabric of the funds industry and the asset management industry in Ireland will look quite different. I think there'll be a lot more management companies, AIFMs, Supermancos, MiFID entities. I think there'll be a lot more asset managers to have people on the ground here. Certainly I've had conversations with large asset managers who've said, for example, that what's been happening with Brexit has forced them to strategically review their business model. And in doing that, they now can see the benefit of having an entity and a presence in Ireland and having a headcount here that they wouldn't otherwise have done, because they wouldn't have voluntarily gone into that process of reviewing their business model from a strategic perspective the way they did. But even if Brexit were to be cancelled tomorrow, that won't change their plans. That it just makes sense for them, having done the work, to say, well, actually, we should have a presence here. It'll help in terms of accessing talent. It'll give us diversification in terms of our business model. It'll give us a European license. We can access people and talent. And it still is cheaper to do business here than it is in London. So there's lots of positives, I think, at the end of the process. Going through periods of transition and change is always difficult. So I think the journey's difficult, but I think when we get there, the fabric and the landscape will be much richer here in Ireland than what it maybe has been in the past.
May you live through interesting times.
Well, exactly.
It looks like 2019 is not going to disappoint in that front. And even as we get towards the end of January, it's quite clear that a lot of the agenda in terms of legal regulatory developments is going to be driven by what happens on the Brexit front. I'm going to wrap it up there. Thank you very much, guys, for your time.
Can I butt in?
Absolutely.
Can I just give a quick plug? Looking at the year ahead for some of our events. So I'm sure the listeners of the podcast will know Irish Funds has a full calendar of international events that we hold all around the world to promote Ireland as a great jurisdiction to set up a fund range for global distribution, and also informative panel sessions and speeches and presentations, keynote addresses. So we have a full schedule. We will be in the US in March. We'll be in Chicago, Washington, New York. We'll be in London in April, on the 11th of April, for Alternatives.
That's an excellent conference.
Seminar. It is, thank you. Our annual conference will be back in Dublin in the Convention Centre on the 23rd of May. I think you were at last year's.
That was my highlight of
and can confirm that it's a fantastic conference. So get in early. All the details are on our website, irishfunds.com/events. Get in early. We have a full calendar of events for the full year ahead. So
it is a very active association. You do a lot of events. I've been to the London event, it's very good, and the Dublin event is very, very good as well.
We're in Asia. We've just finished a roadshow in Hong Kong and China. We'll be in continental Europe. We're probably going to South Africa for the first time this year. So a lot going on the event side. Check it out and sign up.
So if anybody wants to contact Kieran to get on this South African gig, Kieran Fox at irishfunds.ie. Thank you, gentlemen, very much for your time. Let us wrap up with your dreams for 2019. My dreams for 2019 are: 1, Leeds United to finally leave the second tier of English football after 15 years. 2, a return to Meath-ness. And 3, a Brexit that ends well. Gents?
I have to say an ILP.
Oh, gosh.
A function ILP. A 5 in a row.
Oh, no.
Should have ended the podcast 5 minutes ago.
After that, I don't need a third.
Okay, Derry make the Super 8s. There we go. The plug for Gaelic football as well. The much maligned Derry team make the Super 8s. Crikey, I don't know. Ireland win the Ryder Cup. Europe win the Ryder Cup. Ireland wins the Rugby World Cup. We have a withdrawal agreement, or Brexit just gets cancelled, and we all live happily ever after. How's that?
Sounds pretty good to me. Thank you very much for your time, gents, and we'll catch you next time on the Aquest Podcast.
You've been listening to the Aquest Podcast. For information about our training and advisory programs or our academy, visit aquest.ie. For more resources on regs, funds, and governance, check out our YouTube channel, Daniel Lawler, RURQ.